school, and then we know how to fill that answer out on a test. Life is so far beyond that. I don't want my life to live like that. The biggest example or the easiest analogy for that in real estate is the highest and best use. So highest and best use is an appraisal term, which is what do you do with land? It starts with legally permissible. What can you legally do? Zoning code, we all know this. Zoning says you can do this. How many times have you seen a realtor list something? Zoning says you can do this, buyer do their own due diligence. What they're saying is, zoning says we have enough size here. I think you can do something, but I don't know what the fuck I'm talking about. So the buyer has to do their due diligence because there's a whole lot of things that people don't understand. And so they understand it's legally permissible. Then the next step is, well, is it physically possible? What's the size? What's the shape? Do you have the elements there that you can physically actually build it? Is the sewer there? Is the water there? Is it physically possible? Then the next is it financially feasible? So it's that second and third order of things. The other way, another good example of that is rent control. So we're told all the time that rent control is really inflationary for tenants. It's going to make rents go up. We get that. That's the economic thing that's been beat over our heads based on economics from the 1970s. I think differently. This is kind of a tune throughout my thing, but what I've witnessed is rent control that was implemented in the Portland area did not go to tenants. Because what happens when you implement economic policy, when people are tapped out from 10, 15, 20% rent increases year after year after year after year, and they are maxed out at affordability, and there is no ability for them to pay more. And then as a landlord, you take on more expenses, and you have a tenant you can now not offload expenses to. Tariffs is the next conversation in this level, where we're told at a textbook level, this is the first order way you need to think. But once you've operated a business, and once you've hired people, and once you've fired people, and once you've lost $1 million and you've earned $1 million, you realize there's second, third, fourth, and fifth orders of things. And that's how I want to evaluate the things that I do in life is, okay, if this, and then that. And that's the decision I ultimately want to be making my decisions from is what's the daisy chain of events and how does that affect what's being done here. So that's kind of my first thought of that. My second thought is real estate's not passive. If you're trying to get into real estate to be passive, it's just, that's not how it is. You can build a passive income stream through real estate, but it takes a shit ton of work to get there. So you either build equity somewhere, you get an inheritance, you get cash, you have a really good job, you make a good income, and you trade that equity for equity in real estate, or you build that equity in real estate. And so if you're building equity in real estate to then get passive income, you're working really, 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 really hard. So it's not a passive scenario. And it needs to be thought of as how am I going to build this and what is right for me? Next item in the philosophy world is sell is not a four-letter word. How many people have said that? I've said it. I have no problem saying that I've said it. But I look back at my younger version of myself who used to say, I'll never sell anything. That's just someone that didn't have the resources and the tools that I do now. That's just someone that looked at life at a different way and more of a finite mindset at a really a fear-based mindset. So when we think of thinking beyond the first order of things, we understand fear-based mindset and abundance-based mindset, right? Okay, you can either be fearful in your thinking or you can be abundance. You can make positive-based decisions or fearful-based decisions. The next layer to that is a finite mindset-based or an infinite mindset. So on the abundance mindset, you want to win. We are positive. We are winners. Okay, great. Well, you can be a winner on a finite mindset. I bought this real estate. I'm going to hold this real estate forever. I'm never going to sell it. Or you can be a winner on an infinite mindset, which is this piece of real estate that I bought is just a means to a different ends. Maybe I'll sell it. Maybe I won't sell it. Well, ultimately, getting to another philosophy is you build a chessboard. Real estate is about building a chessboard. You need chess pieces to do well in this game. You need pawns, you need rooks, knights, queens, bishops, kings, and you need to be moving those across the table. And pawns, why do you have a whole bunch of pawns? Because you need to make sacrifices. You do need to sell properties. You do need to realize gains. So equity, I have a whole conversation on debt and equity. Equity is fake as fuck. right? It is literally fake. It matters when you buy, refinance, and sell. Outside of that, equity doesn't matter at all. If we never realize equity, if we don't refi, if we don't sell, if we don't realize it, that equity is trapped. It is slow. It stops providing value in our life. But if we sell, if we 1031, if we refinance, if we recruit equity and we take that equity and create more equity, that's how we start stacking. And that's where you get exponential gains. And that's when you create a real estate portfolio that has enough equity, it provides that passive income for you. I go fast. Again, don't hesitate to interrupt me.
I have a question.
Yeah.
You were talking about a daisy chain of events on your first topic. What do you like? Give me an example of that.
Yeah, a daisy chain of events. Here's a really good example. So I just did a Facebook post the other day. So I'm no longer going to do historic renovations. So I just got done with this huge duplex, $180,000 remodel, 13 fucking months. Beautiful project. It is. You look at it, it is amazing. We'll make like 50 grand. We're not going to lose money. Absolute waste of resources. Huge, ridiculous waste of resources. I have 700 grand of private capital tied up in that deal for a year. He's happy. He made his 70 grand. It was tied up in that deal. I have my GC and all of his workers stuck at that project, and it's draining on this project, on that project, on that project, and they have to go back to this one, so it's draining us there. So beautiful project, it can make money in a vacuum, but it no longer feeds the ultimate goal of what I'm trying to do. So where I'm at, what I want to create is a business where our staff are leading the business, they're building their own real estate portfolio, they're getting ownership of the assets that we want. So if that 700 grand is tied up in that stupid flip that's going to make us 50 grand, but I could have used that $700,000 to go buy a $2 million 14 unit and not partner with anybody, and we just use debt and we flip it and we get our capital back out. Now that pie can get shared with my staff rather than having to go get partnerships. And so that opportunity that works in a vacuum messes everything up from what I'm actually trying to do from a global standpoint. So the daisy chain of events are too important to say, I have to say no to this opportunity even though it could be a good opportunity. And that's where what I want to get in life is to be making the decision of doing business who I want to do business with and the types of projects I want to do projects with and the locations I want to do them in. And in order to do that, you have to say no to certain things to then do the things that you do want to do. And if you actually look at my list, I've started out, it's almost like not. Philosophy is not. It starts with, my beliefs start with not believing something. Does that make sense? Sometimes it's harder to say, I believe in this, and it's easier to say, that's not okay, that's not okay, that's not okay. I don't really know what my belief is, but I know none of that's okay. And so that's kind of how some of this started. Does that make sense? Okay. Yeah.
What are the characteristics and qualities of the type of person you want to work with?
I think it's different for everybody. And then it's also like, I want to work with someone that brings value to the table that I don't bring. So that's going to be capital, because most people don't have the real estate chops that I have. So my partners are typically capital partners, or they have a business sense to them, or the ability to raise capital, or expand my thinking of how I do deals. Or like Trevor and Gabe and the podcast co-hosts are a really good example where they just worked in a different arena doing deals in a different way, and that's influenced how some of the changes I'm making in my business model, just getting around them.
Yeah, okay, that makes sense.
Yeah, but ultimately, I am a low fact finder, so I hate working with people that are high fact finders. So for me, I don't need a lot of information to make a decision.
Okay.
My old business partner and my condo partner, which means they're both partners in the condo company, they're both high fact-finding people. They ask the same fucking questions over and over again. They want the same, it's just like, you are draining the shit out of me because I just can't communicate in this fact. I've given you this data, not once, not twice, 5 times, and you need more and more, and that's how they learn, and that's how they communicate. And so I have this in here, is understand your personality. So for me, I am a very low fact finder decision maker. I can make decisions quick, but I'm the opposite when I educate. And so when I communicate with someone, say the same thing 15 different times to get that message. And so that contradicts the crap out of me and makes it really hard for me to be a partner with someone, because I don't want a lot of information for me to make a decision. But if I want you to make a decision, I want to flood you with information. So a lot of life is just understanding what's your personality type. And so when I started realizing that, it's like, doesn't matter what the issues are with my partner, we'll never get along because we're at a point we just can't communicate. Does that make sense?
Yeah. Is it possible you actually are high information, you're able to intuit a lot because of your experience, and you are able to make reasonable assumptions?
That's probably, that could very well be it.
All right.
I think I'm a pretty low factor.
All right, that's fair.
I like to go for my gut. I like to jump in.
It's like even when you're doing new stuff, you're like, take action right away and get into it. Okay, makes sense.
I either take no action or a lot of action. I am the opposites. So it's the worst for my kids, because my kids don't see me in the real world. The kids see me on the weekend. They see me as a loser that doesn't do anything, right? Because when my free time, my fun time is like on the golf course, or I'll go on hikes with them and the dog, but it's like when I'm at home, I don't do anything. I'm fucking lazy. But when I take action, I take action. So.
I have another question to follow up on your passive versus active. You were saying it's an active business. So if you were brand new, what would you recommend someone do? Would it be to, go get a great job and then invest in it, or be active in this current environment?
You evaluate your resources. So make your own goals, create your own buy box. So I'll kind of get down to that.
Okay.
So this is, I don't want to say cliche things. There's a whole bunch of cliche things you can say, but like literally chasing other people's dreams is the easiest way to worry. And that's the biggest mistake I see anyone make, is they chase other people's dreams. And this is literally an ego. It comes from two places. One, your ego thinks you need to do it this way, or two, you're just not sure, you don't really know. And a really good example, I gave someone a free coaching session, met at a happy hour, supposed to be an hour, it's 4 hours. They wanted to start doing this big ramp up their flipping. Everyone wants to wrap up a flipping business. You ask them why. Ultimately what it got down to was, I don't have good systems. They fucking transformed, I don't have good systems. This person has 3 successful businesses, makes a lot of money, needs some commercial real estate so they can depreciate off their fucking income. I don't have good systems, so I need to flip a whole bunch of houses. That is literally where most people make their decisions off of. They make them based off of, well, that person's doing this really, really well, so I think I need to do this. And then you get to them and you get down to, oh, well, okay, so you don't think your systems are great. Well, how does flipping how does that help you, right? And what? Just processes, systems, their acquisition processes, management processes. So just stupid little, something you could hire, or you don't need to start a business to figure things out. And I got some other examples I get into, but and a question that I like to get into that. So is this really what's best? Is this really something that I want to do? Is this really fit my personality? Or is my ego saying I need to do this? And the best way for me to do that is put yourself in that position. Bring life to what it actually is. So, okay, for me, I wanted to have a property management company. Why did I want to have a property management company? Because I knew I was going to have a huge fucking portfolio and I wanted to have control over it. Okay, well, what did that mean? Man, I had to build it from scratch. I did not want to be a leasing agent, but I was. I didn't want to do all these things. I didn't want to get my license. I didn't want to do all these things. But for 4 years, I grinded and I did every single one of these roles to create the processes, to create the systems, 100% against me and what I do. But the second, third, and fourth order of things, that was an essential component, so that way I could have massive control over my real estate portfolio, so I could use my real estate portfolio to create the lifestyle that I wanted. And so then what I did is I just dug into that, and I knew I didn't want to do those things, but I also knew I didn't want to hire someone for that. And I also know I didn't want to hire someone from the industry to then run that company, because I wanted it run for me the way I wanted it run, not how the industry said it should be run. So you make decisions like that, which is, well, where is your value set? And then you start putting it in there. So what's your end goal? You should determine that yourself based on your own desires, but really it's your personality. So analyze what your personality is, and then what are your resources? And then how best use your personality and your resources to then add value to someone. There's 4 types of resources. Time, we all get that. You're either putting time in this industry or you're putting time somewhere else that then gets traded into this industry. if you want to own real estate. Then it's skills, and skills are a lot of things. It could be the rehab, it could be the deal analysis, it could be the underwriting, it could be the deal finding, the acquisition, the negotiation, the brokering, the lending. So many places where skills can fit in. So where do your skills help? I had an appraisal background. So for me, that was my cheat code. I had an appraisal background. I knew highest and best use really, really well. I knew the city. So I used highest and best use and the zoning code to go find specific properties that I knew had intangible value that people didn't see. And then I found out who owned that property and I contacted the homeowner. So that's my personality. I'm good with homeowners. I was an appraiser, so I went into people's living rooms all the time. So I got comfortable in their living room. Okay, good. I'm good at getting in living rooms. All right, that's the type of property I know what to do with. I know the zoning code allows me to do this. Zoning says I can't do it, but I know this little piece of the code that says I can. Great, that's the type of property. Here's how I find out who the owner is. All right, it sucks. Pick up the fucking phone, call the phone, and then build some rapport and then have a conversation. And then now you've added value because you've had that conversation, you found out what they wanted. You don't even have to get a contract. You just need to know what they need and then connect that to someone who can do something with it. If you can't do something with it, then connect something. And then that gets to our third or fourth resources, which is social capital. So there's two types of capital. These are 3 and 4 of the four resources, social and then currency capital. Social capital is significantly greater than currency capital. I don't use my own money in my deals for the most part. I use operating capital in my business to be in and out of deals. But me personally, I don't use my own money in deals. It's all social capital. So everything I do is either bank related, it's balance sheet related, so it's my credibility and it's my income related, or it's socially related. It's just people know me, they like me, they trust me, and so then they give me money to do deals. Social capital comes in so many different arenas. It could be as simple as, I really need this repair list done. Can you not do that person's job and come do this, right? You just getting favors, getting things done quickly. Even I had an attorney. Oh man, I needed an LLC created in Washington. I don't know any attorneys in Washington. So I leveraged my attorney in Portland to leverage a favor with an attorney in Washington to get a rush job. I couldn't have, and I needed that done to close on a property where a seller wasn't going to extend and I had given him 50 grand of non-refundable earnest money. Right, so we put ourselves in these positions and then we need it. Money won't bail us out. Sometimes you just need social capital. So evaluate your resources and then your personality, and then how do you use those two things to go find value in the marketplace, and then just turn that value in the marketplace into value for yourself. There's a lot of details that go to that statement. Okay, this is where we get into the good stuff. Real estate tools are not business models, and business models are not real estate tools. Okay. You mentioned short-term rental. I'm not picking on you. I'm going to pick on business models, and this is what we do in the social media world. I grew up in a day and era where when I got into real estate appraisal, there was no online education. I had to go sit in a classroom to get my real estate education to go get a license. You can get any education here, so you have classes everywhere, and there's a lot of money made in classes. Airbnb is not a tool. Airbnb is a business. You are running a business. That does not add value to the actual real estate. Those are two separate things. So if you're running a successful short-term rental and you're extracting value out of it, it's not because of the real estate. It's because you're running the business well. A key component to running the business well is buying the right real estate. And so there's a marriage of things there, and so then we can combine these things and we can sell short-term rental classes, and you need to do it this way, and here's my system. They're selling you a business model. Well, guess what? If you don't like hospitality, that business model isn't for you. And so now I understand, okay, well, what is it that I'm getting into? Wholesaling is the other thing. Wholesaling, the tool is an assignment. It's been used for hundreds of years. Wholesaling is not a thing. It is an organ now because they actually made it a thing so they could register it, so eventually they can tax it and so they can enforce it. But wholesaling is a business model made up by a guru who wanted to sell education to people that had no money, no credit, were poor, and wanted to get out of it. That's how I got into real estate. I made a bunch of money. I bought a lot of real estate. I refinanced all of it, pulled all my equity out of the real estate, put it in the stock market. The stock market crashed, the real estate market crashed, and the appraisal industry crashed. So I lost everything in that short period of time because I followed gurus. That's not what you want to do. You want to actually learn the tools, create a tool belt, and then use those tools. So wholesaling is a really good example of, in a vacuum, you can make 100 grand on a wholesale. What they don't, because it's just $500 of earnest money, a good phone call, you're good with your mouth, you get a contract, you sell it for 100 grand. What they don't tell you is you spend 10 to 20 to 30 grand a month in marketing and systems and all these things to go do that. So the way I look at real estate is just understand all those tools. What tools do you want to use? I love creative finance, but I don't go searching for creative finance because it's a lot of effort to go after those needles in a haystack that are really the only people that those tools are suited for. I know the tool, I have the tool, I use the tool, but I don't try to create a business model around the tool. Does that make sense? And so I look at it this way, is I just want to know how to do everything, and then when I get in front of those opportunities, I want to know which tool do I break out to then work with that property owner. Trust your gut, really what it is, and it's literally scientific, it's your heart. Our hearts are stronger than our brains, they're smarter than our brains, and we innately as humans use words to describe things we don't know how to describe. And there's a whole lot of science behind it, but there's a lot of wisdom in your gut and your heart. Now, how do you calibrate that though, right? So how do you start making decisions? Like, I don't look at spreadsheets. I know I'm gonna buy something before I ever look at a spreadsheet. I use the spreadsheet to confirm my gut. Trevor's younger, he's the opposite, right? He uses a spreadsheet to define, yes, I wanna buy this. That takes a long time. Mine doesn't take a lot of time. Why? Because it's experience, a lot of experience, but more importantly, you debrief those experiences, especially your losses. So when things go bad, why did it go bad? So having these thought sessions and these debriefing sessions to really put it out there, how can you learn from the things that you've done? And then over a period of time, you'll start calibrating these things. So for example, Trevor lost a bunch of money with a human being that is a bad partner. If I were in Trevor's shoes at his age, I probably would have partnered with the guy too and lost a bunch of money because I had done that in my previous self. I met the guy within 5 minutes, knew no way in hell would I ever partner with this human being. There's GoBundance. There's one guy in a group of GoBundance, a bunch of rich people. One guy wiped out a handful of guys, millionaires, in GoBundance. I met that guy within 5 minutes. There's no way I'm going to give that guy a fucking dime. That comes from a decade of experience, and you'll get there, but you just over time. But you have to, what went wrong? How did I get swindled by that? Because I've been swindled, I've been taken. What was it? What did I see? Oh, I knew that. My gut said this, but this was what distracted me. This is why I made this emotional decision instead of this logical decision. Build a chessboard. We talked about that. Yeah. Was there a question?
I coughed, but I've got a question.
Yeah.
I guess just pointing back to your earlier comment of having like a good goal and a good roadmap, because like these swindlers are really good at, here's a flashy new thing, right? But if you're like, you just take a minute and think about like, well, what am I really doing? What am I going for? What are my goals? It helps you say no in those moments where you could otherwise, diverge from your.
Yeah, and ultimately you want to kind of create rules or metrics or some things that you look by. So kind of going back on that historic flip, so I created a metric in our calculator, so our buy box, refining our buy box. So now our metric is profit per month. Well, if the flipping company is supposed to be quick to make lump sums of cash, I shouldn't be measuring it off gross profit, it should be profit per month, right? So just one stupid little metric that makes significant sense, I didn't add into my business until a decade after starting the business. So, stupid. I'm glad I did it now though, and never did it. Okay, so this is a tough one. So make policy, process, and business decisions based on long time frames. So the longer the time frame that you're making the decision based off of, the more sound that decision process is going to be made. Does that make sense? However, when you're buying a property, you want to make it based on right now, very quick decision. If I had to sell this tomorrow, I'm buying it today. If I had to sell it next month, what's the loss I'm going to take? I want to look at my purchases in a vacuum and make sure that they make sense right now. If I have to exit, I can exit. If I'm exiting with a loss, I'm okay with that loss. I'm not taking something that if this goes wrong and this is a huge loss, that loss will take me down. So that's kind of how I evaluate the short term. But when it comes to my business, policy decisions. I want to have long-term decisions because I want those to hold up to the period of time. And then on the acquisition side, if I know that I'm making a really good decision in the short term, in real estate, it always holds up to the long term as long as you have the debt that matches the time frames that you need. Get ahead of the upcoming choke points. I think this is what has made me good at my business, is I identify where problems are going to happen. Whether it's going to be in permitting, in titling, in your contractor lying to you, getting ahead of those choke points. Now, I'm not the best at saying, hey, here's a choke point that's coming up, we should do this now. For example, I had to hire a contractor after I gave him another $25,000 check after my staff member was like, yeah, do you really think we should write that check, or do you think we should fire him now? So making the decision and recognizing the issue are two different things, but getting ahead of those choke points is essential to keeping things operating. You got to clear stuff out of your system. Go ahead.
So to me, that's very important, and there's probably only a couple ways to know that, mainly experience, but probably partners as well. Are there other ways that have helped you kind of figure some of those things out besides that?
Yeah, great.
Take those
Yeah.
Guru courses.
Yeah.
So that's, I mean, you can learn anything online for free. This is kind of where mentors are asking. The only way to really kind of know before you go type scenario, learn it before having the experience, is if you ask really good questions. For me, I learned the power of a question in 2019, and I started upgrading my question asking skills about 5 years ago. Life changes when you change your questions. You stop living on the surface level, you easily go deeper, people become pretty boring. Does that make sense? Because if you ask good questions, you become curious. A curious person asks really good questions. And so if you're curious about the process, like, okay, well, great, I own this property, I'm gonna do this flip. Well, what happens if the buyer finds some pests in the crawl space and I didn't see those? Or what happens if this? And so just think, all I try to do is put myself in those positions. And so like this, I just bought a care facility today. This is gonna be a fucking nightmare if it doesn't work out. But if it doesn't work out, I put myself in the position of, okay, so if the city of Portland really fights me on this grandfathered use, and I have a case that says you have to allow me to do this, and the city says no, you need to get a conditional approval again, and I'm next to a school, and if the school rallies and they don't want a detox facility next to the school, and then they get the neighborhood and they get everyone, what are my solutions to the fact that I own this huge fucking facility that I can't turn into a detox? What are my exit strategies? How am I going to fight the city? What are those things in place? And so I've just put myself in that position, which is, okay, well, can I fight for the use I'm trying to get? Is there protected class laws on file for mentally ill or age? What are the cases I can make to fight for this cause? Or what are some other things I can do with the property? Can I do an SRO? Can I find a nonprofit? Does that make sense? So I'm putting myself in the problem ahead of time. So I know I wanted this city approval before I bought this $2 million property and put another $500,000 into it. The reality is that wasn't ever gonna happen. So I have to take a risk, I have to buy it, I have to start renovating it. But I know that whether they approve it or not, that $500,000 would be spent whether I go this route or that route. So I may as well buy it, I may as well renovate it, I may as well fight for this use. And I've already signed a lease with the tenant, they've given me $50,000, but I have contingencies in that lease to give the money back if I can't get this right. So I'm planning this out and I'm building in the contingencies, and I know how I'm gonna create a plan if I need it, or a defense case if I need it. So does that make sense, where you're just role playing? It's role playing is really what it is.
Okay.
Sorry, that's a really long way to say you role play.
Is it role playing or contingency playing?
Yeah, that's exactly what contingency playing is you're just playing the roles of if this then that, I think, yeah. Okay, that was the philosophy section. Okay, economics and market conditions. Okay, this is why economics is really important to me. You're not gonna find a decision in life that is not economically framed. Name one decision that you make, and I will tie that back within one or two orders to economics. anyone come up with some statement that is not tied to economics, I'll show you how it is.
What I ate for breakfast this morning.
Yeah, what did you pay for it?
It was free.
Okay, what did you have for breakfast?
I'm just kidding, it wasn't free.
Right. So we can tie any decision we have back to economics. So literally, economics is the foundation of our decision-making process. Now, if you understand economics, that also goes to history, that also goes to geopolitical boundaries, that also goes to religion, that also goes to caveman days and our DNA. So when it comes to economics, literally is entwined in every decision we make every single day. So that's the level that I see it on. The way my brain works is I see patterns, and so I kind of recognize our economy is a big like vehicle or a big machine, and there's these different mechanisms inside, and if something happens here, it creates an issue here. If you fix that here, it creates an issue here. And so how does that all work together? And so that's the way I look at it. And so to me, history matters, and geopolitical boundaries matter, and religion is part of it, and politics is part of it. And so how does all that come into an equation where now we can make financial decisions based on what's going on with macroeconomics? So so your market conditions and macroeconomics, they only really matter to your macro goals. So I don't make my detailed decisions based on what's happening at the macro level. But I want to know what's happening at the macro level, because ultimately that is going to get down to me. And specifically, it's going to start affecting your local politics. And so what's happening at the federal level is going to start influencing at the state level, and then what happens at the state level influences the county and city, which ultimately then influences your holding portfolio. So I started getting involved in politics at the landlord-tenant law level in the city of Portland. Why? Because we had crazy Chloe U. Daley wanted to enact a whole bunch of things, and I had a big rental portfolio, and I'm somewhat charismatic, and a lot of people knew me, and a lot of people were really fucking afraid to say something. Here, I love putting my foot in my mouth, and I don't mind offending people, and so I started getting involved in politics. And that was really eye-opening to see how much influence that had on my business. And being on the leading edge of the politics side gave me a leading edge on everything I did in my business side. I knew what was coming down from the changes standpoint. So from a property manager, we are already prepared. So, oh my God, these changes are just made. Yeah, we haven't built into our systems 9 months ago because I've been working on this. So by being involved at the local level and the political level, I can now start informing my business to take steps now to get ahead of the game. Gives us a competitive advantage. I have this conversation all the time. Why would you want to own rentals? Oh, my friend owned, they never want to own in Portland. Yeah, it's great for me because it's amazing for me because I know what to do. So that's what I want to know macroeconomics for. Obviously, interest rates matter, but okay, I'm going to get down to financial. So we'll forget that. So financial statements are really important to me. This is my best take from Rich Dad Poor Dad, which is, Kiyosaki's not a great educator. He's a great story teacher. He's like Jesus. He talks through parables. And his example was his CPA stole from him because he didn't know how to read financial instruments. There's two fucking financial statements. There's a balance sheet and a P&L. They're highly flawed. To a real estate investor, to a real estate operator, those two pieces of financial data are highly flawed. Your balance sheet, although it shows liabilities and equity, why is it that one side of the balance sheet always balances the other side? Because your equity is based on cost. It's not based on the market. So your balance sheet does not show the market. It does not show your equity, your actual equity to the market, which is bullshit. It's fake, right? That's why it's not on a balance sheet, because it doesn't make sense in accounting, because it's fake, it's bullshit. But that fake bullshit is what gives us our passive income. So we want it, we want to create it, we want to realize it. So we need to understand the flaws in the balance sheet, which is it doesn't show equity. We need to understand the flaws in the P&L. So a P&L doesn't show you where that money is coming from. And in real estate, you use a lot of debt. So understand, okay, so you've got money coming in, you have money going out. How much of that money is actually income versus debt? That money going out, how much of that is legitimate expenses versus not legitimate expenses? And so now understanding those two points of it, and really and then the other, now the essential, so those are the two surface level, right? The surface level data points that they tell us we need to understand. But what's more important to us is a real estate schedule. We need to have a real estate schedule, and we need to update it regularly so we know what our actual equity is. Cash flow projections. So for me, I have cash flow projections in every single one of my businesses. It's time consuming, but that is the glue between the P&L, because that cash flow projections includes the debt events, my construction draws, right? So I'm always projecting out where that cash flow is going, because really what I'm trying to do is I'm trying to see liquidity. At the end of the day, I want to have a liquidity measurement. I want to know how much liquidity do I have access to now in one day, how much liquidity I can get access to in 5 to 10 days, and then that's going to inform me on how opportunistically I should be or should not be in my business based on the resources I have at play. Also, for your portfolio, return on equity is the best tool. So the return on equity is now that's combining your actual debt to your equity, so your debt service. So it's actual, what is the cost of your debt service? How is that reflected in your net positive cash flow divided by your net equity? And then that becomes a tool that says, well, these are the properties that are my least performing properties. These are also happen to be typically my biggest headaches. It's amazing how that happens. Least performing, biggest headache. Oh, sell that property, right? So now we have a real estate schedule that's updated to show our equity. We have our actual NOI, or excuse me, net positive cash flow. So we have our return on equity, and then we have our liquidity analysis. So we know what we should sell, we know where we have access to capital, and now we can put all those resources together to then go buy and be opportunistic.
Do you delegate any of those tasks, or do you do
The CFO stuff I do all myself now. I can't wait to delegate the shit out of that.
How often do you do those tasks?
About bi-monthly for me. I kind of do it, and it's really just how, I have like 30 grand in mortgages in the first half of the month, and then the second half of the month I'm processing construction draws and construction payments, and so it's kind of a double up, and then, you know, I'm buying and selling houses every month, so I do it bi-monthly for my development company, bi-monthly for my service companies, and then like monthly or quarterly for my holding entities. There's a lot of value in that, and I was telling Trevor when we were driving here, that's probably my biggest area of growth over the past few years, is really getting into our actual financials and creating special custom reports for myself so I can analyze the business, because I never knew how to do any of this. I took accounting 101. In fact, some of my high school credits transferred over, and so I didn't have a really good accounting background, but I was buying fucking millions and millions of dollars of real estate and all this debt. Not cool. It's fine because I know how to create value, but you can really get even more refined and create more value when you understand the financial components of it.
What's helped you recently with improving that, like resources, books, education, practice, programs?
Focus.
Focus, Adderall. Yeah, because for me, I'm. I do. Trevor had to have an intervention because I was taking too much of it. It's for me. I'm lucky enough. I have a lot of experience. I have a lot in here, and so really, just literally Adderall on time and getting my brain into a spreadsheet, and then refining that spreadsheet. So I started doing this in August 2022. So up until August 2022, I did most everything in my brain. I could do it in my brain. When the shit hit the fan and we had a $26 million condo pipeline, that was new to me. So that quadrupled our business, the condo pipeline. And then the biggest financial wrench was thrown into that process. The flipping isn't, because flipping is relatively short term. I think we may have lost money on 1, 2, maybe 3 flips and all that chaos. The condo company has been just a cash draining nightmare. And so that's when it was, okay, this is gonna be problematic. We went from 90% loan to cost in the finance world to 70% loan to cost, meaning what we thought we needed from an equity standpoint is now 3x. So the $1 million that we thought we needed, now we need $3 million. Okay, great. We need to come up with $2 million. That's just known. But why do we need $2 million? Where does it come from? Where does it go to? What's the process, the order of events of which projects should that money go to? And then through that process, I just learned a lot about cash flow management, and then creating kind of custom cash flow projections along with equity projections that ran together into a map. And so I just want to look 6 months out, and I kind of want to know what's my horizon for the next 6 months. And then the reason I look at it bi-monthly is because I throw bombs in it. I write $50,000 earnest money checks, and because you're a deal junkie and there's a good deal and you have to get the deal, and you do stuff like that. And then you buy something, you don't have money for it, you're like, fuck, I use this money to buy this, and then you got to go figure that back out. So that's the cash management side when you're deal junkie.
Yeah, so I got a question on that. So you're saying like, hey, I just looked at the spreadsheet, put my mind in it, figured it out. Like, were you reading a book or like looking something on the internet when you're doing that? Like, how did you get into
Yeah, so it's just being intimate with your business. So you know how many mortgage payments you have, you know what your payroll is, you know what your rent is, right? So it's literally just, these are what my expenses are, and kind of mapping that out. What's more different when you get into real estate is I've got a $150,000 construction job, but my budget went to $225,000. So I need 75 more grand for that project. Does that make sense?
Yeah, I think I'm trying to ask like, how did you get the hard skills to be able to do those things? Like the technical
Did
skills.
you learn this from?
Yeah, I've lived through it.
Just live
Or
Yeah, I've
did
lived
you-
through it. So I've lived through it. And so then you just put that process down.
Yeah.
So like on the project side, it's, well, what's the end value going to be worth? What's my debt now? How much more can I draw on? So I'm literally now analyzing it, draws on both sides, money going out, money coming in. Does that make sense?
It does make sense
Okay.
of how the situation came about. I'm trying to think like, how can I do this in my own life?
Yeah.
I don't have like.
So let's give a
Doors.
good example. What are you getting into now that you want? So your short-term rental, right?
Yeah, sure.
Yeah.
Short-term rental, trying to get more parcels of land or like splitting it up with multiple investors so that way we can put more little tiny houses on them. You know, like just trying to do
Yep.
that.
Yep. So you don't have that back end side that I'm just describing that's really chaotic. But you have the front end side, which is okay, so it's acquisitions related, right?
Yeah.
So you're on the acquisition side. That means you're going to need money for marketing, money to reach out to sellers, money for due diligence, money for earnest money. From the cash management side, does that make sense?
Yeah.
Yeah. So it's not, understanding the flow of it isn't as important on that portion of it. When you have think of it this way. You've got your acquisitions going. We're going to buy 10 properties this year. Me and this person, we're heading that up. We've got this short term under renovation. We have this one in escrow. And now when you have all those things going together, that's where it becomes more intricate, where you need to have more focus on all those things at once. Does that make sense? That's what I was trying to get at.
Okay.
Who did it? That's how I did it.
You what?
Who did it? Or you did it? I don't know, whatever it is. It's the online class in accounting and everything else that you could possibly want to do.
Oh, cool. Okay.
Yeah. I just look at net operating income.
Why?
So I understand what's the net operating income calculation, and I just get to that. And then there's just cash management. So, but it's confusing. I don't want to confuse it anymore. Okay. How much time do you want me to talk about?
Another
Okay, I got
5
just
to
a little
15
bit.
minutes,
So
yeah.
debt versus equity, this is kind of where my brain's going, or where it is these years, is when you get into like economics and history, you can see how we originally started pretty money and how we created a credit economy where the government and the central bank being facilities of credit, that's ballooned over years, so now we have significant amount of equity in the economy. And so all that's essentially, if we can look at it this way, is there's assets and there's equity, and that equity is just moving around between assets. Our job is to try and get our own piece of that equity and to control those assets. And so when you're buying something, it's literally, well, where does the equity come from? It can be your own cash, it can be other people's money, or it can be equity from somewhere else. And so I want to separate the thought of debt and the thought of equity from the real estate. And I want to look at it as the real estate is just debt and equity. And so I want to be having conversations and thinking of, where am I getting equity in my life? Do I have a job creating equity? Am I communicating with other people that have money to get equity? Am I syndicating things to get equity? Where am I raising money to do the deals that I want to do? And the deals that you want to do are then going to state what and how you're going to raise that capital. Then the other side is, okay, what I want to buy is going to typically require this type of debt. So I'm thinking of how am I getting that type of debt, how am I getting this type of equity, and then just marrying those into a real estate acquisition. I've touched on this. Yeah, go ahead.
Just because you mentioned this a few times now, what are some of your go-to sources for getting your economic insights, thoughts, and trends of where things are going?
Yeah, I started, Ray Dalio was the first start of it. So economicprinciples.org, his little cartoon of how the economic machine works, 20 minutes, is amazing. The economy is just transactions. It's literally a machine. And he called it, how does the economic machine work? And so this cartoon just shows you it's just transactions times trillions. Oh, that is really easy. You may not be able to fathom that, but you can break that down to the transaction level and make sense.
What's the name again?
Ray Dalio, it's economicprinciples.org. So he got me to see economics as a machine. Then the other side was, I forgot this guy's name. I learned about financial repression. So financial repression is using inflation to pay down debt. So it's just using a future cheaper dollar to pay off debt in the future with a cheaper dollar. So there's a whole mathematical equation to this, and we can see this over time. From 1947 to 1974, we paid off our debt because we had inflation higher than interest rates. So I learned financial repression. So you understand that there's the machine, you understand that there's debt, you understand that there's inflation, you understand how those things kind of work together. Then you start learning verbiage. So then, okay, well, what's fixed income? Well, that's the bond market, right? It's an income asset. So then when you start learning the language, Bloomberg. So Bloomberg podcast, Bloomberg Surveillance is the best economic show out there. All they do is they interview the most brilliant economic minds, and they're not professors in a college. They're economists that work for the biggest banks in the world. So they actually touch the money, they actually make decision and policy decisions, and so they implement economic theory into principle. So when you understand the language and you hear a really smart person interview another really smart person and you can decipher their language, then it starts to click. But there's this run up for me, it took probably 5 or 6 years, and it was just data mining. Yahoo Finance was a big source. In 2014, I bought a Subaru Legacy, brand new, so I had Sirius Radio and I had a subscription to Bloomberg. So I listened to Bloomberg Radio, which I turned into a Bloomberg subscription, which is now Bloomberg Podcast. So Bloomberg's a lot of it just because it's financial data. And then you learn their verbiage and then stuff starts to click. And then really, the markets is just allocation of equity. So the stock market goes up, the bond yields go down, it's just money moving from the bond market to the stock market, or money moving from the bond market to the stock market and to Bitcoin, like what we're seeing right now. So when you start seeing it from that level, it all kind of starts making sense. Equity only matters in one of 3 events, right? You buy it, you refinance it, or sell it, but you need to harvest it. You should harvest equity. Don't just let equity sit. My mindset around 1031s came in a mindset conference, not a real estate conference. And what I realized was by all the years that I didn't trade my real estate and mine for the value and recognize the value in my real estate, that was just slow. That's just my portfolio being a victim to the market, where I can realize that equity and use that equity and stack it. And so that was just a lazy way to build wealth when I could have taken a couple action steps to sell property every single year and upgraded that. So that's more of a mindset thing than a financial thing, but they combine together. Debt just needs to match.
So on that, you're saying that am I right in saying that you wish you'd done more like return on equity calculations to do more 1031s, and now you're more in tune with that? Is that right? So you would have been buying and selling more frequently in the past, and not being lazy by just leaving things as they were.
Yeah, now I want to identify what can I sell to create the equity. So rather than go find new equity, I've got it. How do I farm it to use it?
Would you be keeping it in real estate with 1031, or would you be using it, like selling it, having to pay capital gains?
I'm not against paying capital gains, but if you're active, you never will. typically what I do is I've sold something, thrown it in an exchange account, not had an exchange, thrown it in an exchange account, found one and exchanged. I've sold something, not had an exchange lined up, and then not exchanged. But typically what I do is I find something, I really want this, but I need to sell this to buy it, and I just negotiate that based on this. So I reverse without doing a reverse, because you're just active on the acquisition side.
Constantly getting rid of your least performing property to pay for your
Exactly.
So you don't find that when you find a property that you do want to buy, you don't find that gets put on secondary, third spot, and by trying to like, hey, I'll buy that, but I have to sell this first.
It's just, I haven't done a whole lot of exchanges. It's just, so I've done 4. 2 of them were just, hey, identified a really good opportunity and didn't have the resources to buy it, so we looked at the portfolio and said, well, if we sell this, we can buy it, and then did it that way. And then the other 2, which was, need to sell it, don't have anything figured out. So I look at it as a 1031 is, it's just a decision to harvest. What you do at that point doesn't matter. Just like you buy the property, you put it on the chess piece. So here's a really good example. Jaron the other day. So he bought a property, he's gonna divide off the land, sell the house off, get all of his money back. Okay, what are you gonna do with the lot? Most people would say, I'm gonna do this or I'm gonna do that, right? A finite mindset. This is my game plan, this is what I'm gonna do. Jaron's answer is great. He said, I don't know. Because he doesn't care. Because what he understands is, I put that piece on the chessboard, 12 months from now, when that chess piece is usable, I'm either gonna kill it and trade it in, or I'm gonna move it across the chessboard, right? So either you sell it, it's a rook or it's a bishop, you sell it, you cash it in, or you build something on it and you rent it out, refinance, rent it out, and you put it in, it's a rook. Does that make sense? And so I look at it as I'm only doing acquisitions because I'm filling up the chessboard. That's all I want. And then as 6 months from now, life's gonna be different. I'm gonna have different life decisions to make, and so I'm gonna look at that chessboard differently. And if you're looking at your chessboard every 6 months and you see the same board, it shouldn't be, it can have the same exact assets on it, but you should not be looking at it the same way, because you're not the same person 6 months later. Does that make sense? So you should have a different lens on it.
Sure.
Yeah, I had just put a point on that. I had a property. It was an awesome return on investment. It was like 52% every single year, and it was great. And the IRR was 30%. But then I went and I stumbled into the return on equity investment, and all of a sudden I looked at it and went, wait a second, I'm getting 5% on this? Well, I should put my money in the stock market at this rate. And so that was where I put it up for sale. It's like next week. So it's a worth calculation. That's my thought was, is this, if I put my money somewhere else, can I do better somewhere else?
Wouldn't that be based upon whatever your current goal is? Because if your goal is, say, passive income, retirement, whatever that's going to be your nest egg, then yeah, you may not be making as much off of your equity, but you'd be making more towards your potential goal.
Potentially. I mean, and for me, I just 1031 it into something bigger and essentially reset that return on equity is what I did. And eventually I'll pay it off enough or I'll have to do it again.
Yeah, and you're at a point where that made sense. And you're going to look at that and say, oh, I'm okay with this. You don't need to make a decision, but it's just good to know.
What's your opinion on, so we have a small portfolio and we will likely keep it smaller, but we've considered doing somewhat of a debt snowball, so taking all our cash flow, since we don't need it right now because we both still have W-2s, and paying down our one with the highest interest rate, and then that would cash flow much greater, and then turning it into different ones. And so that when we retire early, which is our goal, is then we'll have much more cash flow. So from an economic standpoint, and I guess kind of cost of not doing some other options, what do you?
Yeah, well, you nailed it's opportunity cost, right? So
Thank you, that was the phrase I was
what you just, and I don't want to project my opinions on you, right? Because again, we're all at different points in time. What you just told me is you don't want to use the best tool you have in your real estate portfolio, which is inflation, to pay off your debt. Because you're saying, I'm going to fast forward to paying off my debt rather than pay it off with the cheapest dollar. So if you're paying it off faster, you're paying it off with the most expensive dollar, not the best return on your dollar if you have a better use for it. But if you don't have a better use for it and you don't want to find another, does that make sense? So if you're like, hey, I got my 10 properties in 15 years are gonna be paid off, I'm happy. Well, then by all means, pay them off in 5 so you can be happy in 5, not 10. Because that's your goal, that's your purpose, that's your vision, do your vision. If you want to look at it in a vacuum and maximize your financial output with those resources, paying off the debt's not the best way to do it. Taking those resources to buy more real estate with more debt is the best. That's the double edge of that sword. You're using the double edge rather than the one. So you can look at it in a vacuum and say, this is the best financial thing to do, but ultimately you need to blend that with who you are as a person. I've done the most financially beneficial things all the time and fucking hated myself for it. So there is harmony there of what's best for you. Yeah. So what I would do is pay down equity lines if you have equity lines, because you have access to that. Does that make sense?
Mm-hmm.
Like if you've got an equity line at 9%, just pay it off because you can go get it back. Rather than just put it in savings at less than 1% when you can put it in this savings for 9%.
Right.
Yeah. So just start making tactical decisions like that. But I'm all about adding assets to the portfolio as much as you can, to whatever extent it takes to get those assets in your portfolio, and then hold on.
Yeah, I think her point was, like, that's what we're all trying to do, and
Yeah.
do it strategically, like, you leverage everything you have to get there. But for Tony, that might be 4, for you, that might be 400, for me, it might be 10, right? And then once you get to that point, then the goal is get those things paid off and positioned for the next stage, right?
Yeah.
Which in your case is paying off the debt, getting maximizing cash flow, because you've determined that number is what you need to live on, essentially in retirement, right?
Mhm.
Which I think is what a lot of people are doing. Like
Yeah.
a lot of these business principles you're talking about can be scaled way down to what
Absolutely.
a lot of us are trying to do.
And that's the best way to do it, is scale it down to implement it, because what you're going to find is you change as a person as you start implementing them. So day 1 you think you're going to do this, at day 365, and at 365 you just make a different decision because you're a different person. Yeah. Cool.
Love to have it.
What's your favorite deal you've done?
My favorite deal?
Yeah.
It would be the last partnership I just did. It was the 2 deals, the 14 unit. So I put together a little mini syndication with 3 capital partners. We raised 373 grand per capital investor to raise 1.1 million to buy 2 properties. One's a $2.1 million care facility. That's half seller financing, half bridge debt with a construction draw component, and then a 14 unit that was all seller financing.
What do you mean by bridge debt?
Hard money loan, so it's got an 18-month loan on it that I've got to pay off within 18 months. Yeah. So and then essentially, and I'll get to you, Kelsey. So in that scenario, it's 2.1 purchase, $1 million down, and $500,000 in renovation. So I need, essentially $1.5 million. But I'm only having to bring 210 at closing to buy it, because the lender's bringing 790, and then they've got a $575,000 construction draw, so I can draw on that for the construction.
How'd you structure that note on that? Did you put them in second, or did you have it uncollateralized?
The seller note?
Yeah.
We went in second because it was bridge debt.
Okay.
Yeah.
Would you generally pay that off like bank financing, or how would that
The
generally-
bridge debt will get refinanced. The seller's got to stay subordinate for 10 years. That's what we did with the deal. Yeah. So I'll either need to take them off title, move them, and that's one reason that having the 14 units pretty good, because now I have another piece of collateral. I can just move him here, refinance that property, and then we have the same amount of global debt. It's just shifted.
Do you think you'll have to take them off title because your takeout lender won't allow them to be in second? Or?
Maybe, maybe not. I'm going to talk to a local credit union. I think will allow it because their LTV, the credit union's LTV will be like 40%,
Yeah.
and then the total LTV will be 68.
Oh, you'll be fine.
Yeah.
If you DSCR, yeah.
Yeah, and the global DSCR is like 1. Dude, my expense ratio is 9%.
On the care facility?
Yeah,
Because you're how?
I'm into a 2.6, and we're renting it for 25 grand a month on a double net lease.
Just because you're passing on expenses.
all the expenses go to the tenant. Yeah. So the DSCR is really high. Cool. So that's what.
Why is that your favorite?
My favorite deal because we got a fee up front on the acquisition side. creating a lot of equity, gonna be able to get all the capital back plus a lot of equity in those events. So there'll be another equity event and then a lot of cash flow at the end. So it gets all of the benefits of real estate and bonus depreciation and all that other stuff. Yeah. Cool. All right,
Any-
take it on.
We can do one or two more.
Whatever,
questions.
I don't, yeah. seriously.
Anything on the macroeconomic front that
We didn't
keeps-
talk at all about
that
infill
keeps you up?
development.
I know, but well, if people are interested in that Thursday night, they can
Yeah.
always go to Portland, right?
Yeah,
Because you guys will be talking
we're
about
gonna say
that.
if you want to know infill development, you gotta come to Portland. Macroeconomics.
What's keeping you up at night right now? Is it on the
Fucking Trump trade, dude. Fucking Trump trade. So we got the 10-year yield under 4, and then before the Fed cut, it went down to 3.6. It was kind of hovering at 3.8, 3.9. We had a really strong jobs report. The market reacted, but it looked like 4% was going to be our ceiling. And then the Trump trade started. We went to 4.25, and then the Trump trade doubled down.
Yeah.
So we went to 4.45, and then Trump won, and we've just hovered 4.4 to 4.5. So and all that is because inflationary. So you have a strong jobs report, that's inflationary. Trump being elected with tariffs and lower taxes, that's inflationary. So the equity, macro money, does not want to be on the bond market. So if it's not in the bond market, that means it's going to the stock market, record stock market. It's going to Bitcoin, record Bitcoin, but it's going out of the bond market, which means our yields are going up. So bond values go down, our yields go up. So we're stuck with high interest rates. And as someone who needs to sell fucking real estate, that sucks. I will say this though, even though interest rates are high, sentiment has been shifted a little bit since we got past the election. And we saw that, and all of our feedback was buyer loves it, they're nervous about the election. And so now that the election's done, buyers are talking to mortgage brokers, which means they're on that front end side of getting back out in the market to look. So the way I look at it is I didn't put as much emphasis into the election as I probably should have, given how much civil unrest and social anxiety was around the election. So it makes sense that I expected when the Fed pivoted their policy, when we went back into a less restrictive policy, interest rates would go down. We saw that. I expected sentiment to increase. It did for like a week, and then the election bullshit happened, and sentiment just disappeared. Now that we're past that, it's starting to come back. We didn't have that selling season, which means there's more pent-up demand than what we would have had we had it. So instead of having a normal selling season start after Super Bowl, I think we'll see what we've seen the past 2 years, which is it starts in January. So we're gonna have pent-up demand that should come out of the market the first or second week in January, and we'll have more jobs reports by then. Ideally, we have jobs revisions, so the last jobs report gets revised down, and then immediately the Trump trade goes back to where we were right when we got into the Fed cut talk, which should get rates, the 10-year yield back under 4, and then get our mortgage rates back under 6. And so if we have mortgage rates under 6 and the pent-up demand coming out all by mid-January, we could have a really good Q1 on the selling side. Up until then, you probably have another window of buying opportunity. And that's the way I look at it, is if it's not easy to sell, if it's easy to sell, it's hard to buy. If it's hard to sell, it's easy to buy. So it's a buying window, and go try and get good buys.
Mm-hmm. Okay. Other?
What's that?
Oh, you forgot my question.
Oh, shit.
Let's go.
No, what's your question? I told you.
My question was gonna be, which of the deal junkies is your favorite, since Trevor's sitting right now?
Not Gabe. Just because he's recording that.
It's himself.
No, they all have their own personality. I like Dane's Dane's the funnest one to get in an argument with, because he's always wrong. He's easy to win. Trevor asks the best questions. He thinks most tactically. I probably learn more from Trevor, and Gabe and I are way too similar that there's not enough polar frustration to make him my favorite. Yeah.
Are you just saying that because he has to give you a
No.
break? Okay.
No, I'm driving him.
Oh, okay.
Or you can walk.
Yeah, you can walk.
Any other questions? Other questions? Awesome. We'll give it up.
Cool. Thank you, everybody.
And we'll, anybody that wants, hang out here for another 30, 45 minutes and chat and network and everything.